Hello, I'm Paul Evans.
I'm Stuart Oldmeadow.
Welcome to the Miles Market Update.
Now you might notice we're one down. Jess is now on maternity leave. She's just gone. So we wish her all the very best. And
no extension of time has been granted. She's away for 6 months and we wish her all the best, of course.
Of course.
How's the residential market travelling, Stu?
Well, the market's still moving and properties are continuing to sell, albeit at a more measured pace. Interestingly, quarterly statistics show median prices have increased across Ivanhoe, Eaglemont and Rosanna. Now, this is largely driven by a high proportion of the larger premium homes rather than the price increases in those spaces. Days on market have increased slightly, and in many cases, we're finding that achieving the right outcome requires more effort and persistence. For us, it's about standing firm for our vendors and securing the best possible result.
And days on market are obviously still very important.
Well, in the current market, selling quickly is not necessarily a badge of honour. In fact, I'd be cautious of reading too much into a quick sale. Now, despite these conditions, we've still delivered a number of strong results for both our buyers and sellers. A few of our recent highlights include 54 The Eyrie in Eaglemont, successfully selling to a very local buyer. We had the property at St James Road in Heidelberg with strong interest from multiple parties, selling very strongly. Jedham Close in Viewbank, a lovely home which culminated in a very competitive auction environment, all fighting for the keys for that home. March was notably our second strongest month for the financial year in terms of volume. As expected, stock levels have eased post-Easter, which reflects seasonal trends. All in all, it's a fascinating market at present and one that continues to reward strategy, patience and experience. So, how's the commercial space, Paul?
Well, the past few months has seen some very unusual market conditions, no doubt. The sales activity has remained steady, but certainly with a smaller pool of buyers, but still seeing some very solid results. More campaigns through the expression of interest process rather than the traditional auction forum. A couple of results of interest: 68 Mount Street in Heidelberg, a 2-storey commercial building sold with vacant possession recently at $1.24 million. 9 Scholar Drive in Bundoora, that's a modern office warehouse, we sold for $1.34 million, and some industrial land in Maida Avenue in Sunshine we sold for just shy of $3.6 million. Burgundy Plaza site in the centre of Burgundy Street, 2,500 square metres of commercial zoned land. We sold that a couple of weeks ago through a tender process with some 65 registered inquiries and achieved a very solid result for our vendor. While some of the buyers are deferring decisions, with some volatility out there at present, it's these moments in time, I think, where the astute buyers have a terrific opportunity to purchase without excessive competition. Certainly still needing to pay solid prices in key locations, that'll never change, but I think the market will look back at this period of time highlighting some very attractive opportunities to acquire some quality commercial stock. Just briefly, the rental market remains a little sluggish with some solid incentives on offer for quality tenants. 151 to 157 Bamfield Road in West Heidelberg, we've just recently leased that to 2 tenants, culminating in an annual rent of just shy of $400,000 a year. 65 Temple Drive in Thomastown, an industrial facility we've just leased at $80,000 a year, and a ground floor retail space in Grimshaw Street, Greensborough, just leased that at circa $45,000 a year. So Stu, I know Jess has left you some very concise notes and some very clear instructions. How's the residential management side of things tracking?
Yes, I've got some large shoes to fill here, Paul. So the rental market Melbourne-wide has remained quite strong over the past quarter. With increased legal requirements from the government, we're seeing some investors exit the Victorian market. As a result, vacancy rates are tightening and rental prices are continuing to rise.
And how's the vacancy rate travelling at Miles compared to the overall market situation?
Well, we always are very competitive in this space and we always love to be much lower than Melbourne's rate.
Yep.
So currently, our vacancy rate sits at 1.38% compared to the Melbourne average of 2.5%. Now, compliance also remains a key focus for our team. New regulations came into effect in March, and new minimum standards are set to increase again in 2027. If you're currently facing challenges with your rental property, it's worth holding steady. There's a high level of demand and plenty of quality renters actively searching for homes. We're also seeing particularly strong demand for the larger homes locally. Recently, we've just leased 13 Lawrence Street in Eaglemont for $1,500 per week. This was leased after just one open for inspection, attracting multiple high-quality applications. At Miles, we offer a quality property management service across Melbourne. We specialise in this space and we are continuing to grow. If you're looking to consolidate your portfolio or have a property becoming available or looking to explore a new property management service, we would love to help.
So I guess in summary, we're here to support our rental providers through these changes that we're seeing out there at the moment, and we'll continue to keep you informed every step of the way.
Absolutely. We're certainly specialists in both the residential management and also the commercial space. We are certainly here to assist with any of your real estate needs. We thank you very much for watching. And I think further to your comment, Paul, the market is still moving and astute buyers are continuing to act in this environment. So again, we thank you very much and we'll see you soon.